Kaynes Technology is in focus right now. Came out with a very strong set of numbers. Street has liked those numbers and the stock is gaining smartly in trade. We've got Jairam Sampath, the whole-time director and CFO of Kaynes, along with Ramesh Kannan, managing director, joining us to talk more about numbers. Jairam, Ramesh, gentlemen, morning. Thanks for your time this morning. Jairam, let me come to you first. Very strong performance for sure. But when we look at your margins, in percentage terms, seem to be slightly on the softer side. Is it only temporary in nature, or in coming subsequent quarters you would see your margins to come back? What is the nice comfortable range you would want to keep your margins in?
Hi, very good morning and thanks for having us on the show. Yeah, it has been a very strong performance. Obviously, the last year margins were under a bit of pressure, but we think that during this year we will probably increase the margins by more than about 100 basis points. And even in the face of a strong growth in revenues too, close to about more than 60% revenue is what we think 60% growth in revenue is what is likely to happen this year. So yeah, it will recover over next 4 quarters to the original levels as per our business thesis or business model.
Morning, if I could just get you in on the discussion, and congratulations firstly, not just the earnings, but the shareholders as well are a very happy lot. Your stock has been on a tizzy after the numbers too. Tell me, what's the outlook for various segments? You know, autos we know have seen a very strong contribution. What are the other segments which are actually driving, the business for you?
I'll request Ramesh ji to talk about this favorite subject.
Thank you for having us here today. For us, the future we are betting on aerospace. We have large orders booked on aerospace from 3-4 customers. We have also see a large input coming on the outer space. There are opportunities for exports in the outer space. So these are 2 areas where I feel the future will have good promises. Having said that, auto industry and the EV industry is going up. More and more electronics is coming into the EV industry. So there will be margin pressures, but margin is a component which we have to create. So we have to continuously work towards that and create it. And I strongly believe my team is geared up to meet all these challenges, to retain whatever we have promised to the streets.
And just to supplement, we have a balanced portfolio. So there is extremely, let's say, scorching growth in industrials too. We are doing a lot of smart meters now, lots of large contracts. Similar in medical, we have finally found a large client, and you will see much more action in medical electronics too. We already got an order from CTAC for high-performance computing servers. There are many other global manufacturers looking at us for this area too. So all in all, like Ramesh said, aerospace, autospace, strategic is one big chunk. Then followed by, of course, railways. Also, we are doing a lot of product development and working on several projects, in fact. And then, of course, automotive and EV goes on its own traction. And then, of course, we have the other segments like medical electronics and IT, IoT, and others. So the order book, if you see, has zoomed to about 4,100 plus crores. And this also does not contain many of the orders that we just received probably in the month of April and May. So all in all, I think the business traction is likely to be pretty high in the coming years.
Sizable. Jairam, if you could just repeat the orders in hand and what the order book visibility / pipeline is looking like.
Yeah, so orders in hand at the end of 31st March was about 4,115.2 crores. And the pipeline, if I were to compute in the industrials and EV and also aerospace and also railways, etc., the pipeline is likely to kind of get added for sure. Will be close to about anywhere between 2,000 to 3,000 crore range. Maybe more like 3,000 crore range in the coming few quarters.
Also, the part of your new business segment, which the market is very excited about, is the OSAT plan. Talk to us how the preparation is going there, and if you could, give us a bigger picture view in the next 2 to 3 years, Ramesh. if I'm assuming right, the plant would be ready and ready for business and operations would start. How significant value would it add to your overall business in the next 3-4 years?
As far as OSAT is concerned, our training activity has started for our people. We have almost finalized the entire machinery list, everything. We're just waiting for the government to give us approval, which is also I am expecting after post-elections. So having known to that, we have done our recruitments. We are training at our partner's place. And I feel in first 3 years' time itself, we'll get into a 1,000 crores plus mark as on the top line with a decent EBITDA of 14 to 15. We are also planning to do high-end silicon assembly. We are also planning to do compound silicon assembly. So new areas where we see a lot of potential in the days to come in. We have put our hands into it, and then all training, all activity.
Year third from now, about 1,000 crore on top line from OSAT with a 15% margin. And how much would the silicon business add, roughly ballpark, say in year 3 from now?
Come again?
Year 3 from now or year 4 from now, with this silicon business, which additionally we are talking about, how much is the revenue potential there?
Around 1,000 crores plus.
Okay. So 2,000 crore additional revenue visibility is there from these two businesses alone in the year 3 from now.
PCB also, bareboard also. So that is another area where we are expecting around 750 to 800 crores of visibility there also. And our existing business for sure will cross $1 billion in 3 years from now.
Like to add on that, just talking about that order book visibility and what the potential is from OSAT, etc. Jairam?
Yeah. See, order book visibility, as far as OSAT is concerned, we have to get the plant established. There are 4 very major clients who have a potential to individually take the entire capacities. Of course, we believe in a diversified approach and also in working in those areas where there is more value and there is niche in semiconductor assembly. If you say order book visibility, the entire 4,000 crore, which we expect to probably clock by another 5 to 6 years' time in semiconductor, all that is already covered by the way of MOUs. But only thing is we have to get the machinery installed and the process going so that they can approve us and then load us with orders. So, and also being a newer generation of OSAT company, our chances of getting the more newer generation items with better margins and advanced packaging, etc., are also pretty high. So we expect the going will be very good. You can almost say that the entire capacity probably in this matter of 5 to 6 years' time will be 100%, maybe 80-90%, let's say, used.
In terms of Ramesh, Jairam, I could just come back to you a little more once more on that one, which you're saying. These numbers ballpark will be in which financial year? FY28 or 29?
Yeah. Like Ramesh mentioned, right? In 3 years' time, see, 2 years it takes to start up this entire enterprise and then get some what we call proof of concept done and some customers onboarding, we onboard people, etc. So by 3rd year time, 1,000 crore is a fairly aggressive revenue. But in 5 years' time, that is 5 years means today is FY25. So by FY30, we should be clocking the revenues around between 3,000 to 4,000 crores. Which will represent something like 80% capacity of the semicon piece. There is high density interconnection piece. Phase 1 investments will be to the tune of about 700 to 800 crores. And that will also yield by of closer to about 700 to 800 crores.
By then, this advanced packaging will be the main activity, wherein margins will be good as well as high technology, and this will be used in EV and other markets in a big way.
Gentlemen, thank you so very much for taking the time out. Always a pleasure having you on ET Now. And I think shareholders are mighty pleased as well by all the commentary, all the projections that you have given us. The stock is up and away at 1.12.5% higher in trade. That's the management. Watch out for all those flashes as well on your screens from the management of Kaynes Tech.
If you like this video, then like, share and subscribe to ET Now.